Podcast Network Asia. FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host, Royce Aguilar from the Research Department at FirstMetroSec.
You are listening to Philippine Stock Market Weekly's Market Bites, our mini-series which strives to deliver trading and investing analysis built on our research reports. For in-depth information, you may also log in to your FirstMetroSec account and head to the Research tab.
Hi everyone, I'm Joan Batara and I cover the consumer sector for First Metro Securities Research. In this episode, let me share with you our latest updates for Monde Nissin Corporation, where we maintained our hold call for Monde, but with a lower target price of 8.90 pesos. We adjusted our earnings to reflect the following. First, downsized corn business. In the first quarter of 2023, corn reported its weakest quarter yet, with just a little over 3.5 billion pesos in top line, roughly 320 million pesos in corn net losses during the period. Following our previous report entitled Waiting on Corn to Perform, it is now apparent that the segment's path to growth and profitability is less certain. Our view appears to be reinforced by management scaling back its planned investments in the U.S. markets, as well as the recent recognition of over 20 billion pesos in impairment losses relating to investments in Marlow Foods, which owns Corn and Cauldron. Recall that most of this was attributed to goodwill. Essentially, the goodwill of the meat alternative business has been written off. So with this in mind, we project a further contraction in Monde's meat alternative business, with 6.5% decline in top line for 2023 to 2024, and losses to continue at the EBIT level in the face of challenging retail sales volumes and the impact of negative operating leverage on earnings. In addition, we anticipate APAC BFB, Asia Pacific branded food and beverage, to continue to be the primary earnings driver, but growth is unexciting. We would like to point out that Monde's APAC BFB business operates in categories where competition is high and markets are mature. We assume that the segment can deliver 9.2% top-line growth per annum in the next 2 years, although much of this will be driven by price increases, now totaling 13.5% between 2022 to the first quarter of 2023. For us to turn bullish, APAC BFB should provide Monde a stable and defensive earnings stream and see stronger growth at the EBIT level to offset losses from corn. As for corn, we would like to see corn revert to profitability alongside clear and visible demand drivers for the meat alternative segment. So again, overall, we are maintaining our hold call on Monde with the target price to cut to 8.9 pesos. This is based on a discounted cash flow model with weighted average cost of capital WACC at 9.8%, 3% terminal growth, and the lower fade period growth at only 5% from 11.5%. Our new target price implies a derating to 21.6 times 2023 earnings and 17.1 times 2024 earnings. We think that the lower multiples are warranted given 1, the unexciting growth profile in the absence of a meaningful contribution from corn, 2, it is difficult to justify valuations close to or above that of Universal Robina Corporation, URC. URC's branded consumer food segment alone has a larger revenue base, which generated over 107 billion pesos last year compared to Monde's 59 billion pesos APAC BFB revenues. URC's branded segment is also more diversified across categories and is on a more stable footing than Monde's APAC BFB business. And lastly, the removal from benchmark indices usually leads to lower for longer valuations arising from less visibility and investability in foreign investors' radar. Note that Monde has been removed from the MSCI Philippine Standard Index as of May 31 this year, so given these reasons, we think that the lower multiples are warranted. That's it for our Monde company update. Thank you!
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.